Hello, everybody. Today is Saturday, March 13th, 2021. Welcome to our Contract Trust Conference call. This is call number 116. We are not accountants, tax professionals, lawyers, or currency dealers. We're not engaged in rendering legal, tax, accounting, or other professional advice. Should you require those services, you should retain competent advice from a professional in that field. Thank you for joining us today. As most of you know, my name is Carol Werelius, and I have these calls every second and fourth Saturday of the month. These calls are recorded and available on our website, www.indicatorinformation.com, itdcalls.com, and YouTube. As we get closer and closer to our expected RVing, we thought this would be a good time to review our common law contract trust and why we think it is the best vehicle for you to protect your assets. We are dedicating most of this call to Q&A today, because I'm sure you all have a lot of questions right now. I think we have a guest speaker lined up today to share his thoughts as well. As always, *6 to raise your hand. You know, I expect most of you have been following the news about our expected event. The news has been very exciting lately. Recently, we've heard that we would be done by this weekend. Now we're hearing we should start by tomorrow or Monday or Tuesday. For those of us who have been involved for a while, it's hard to get too excited by these predictions because so far no one has been correct. However, this time does feel a little different. I don't know about you guys, but it feels different to me. Hopefully our time has arrived. While we have endeavored to share with you the latest information we have received about what to expect at our exchange, things do seem to be ever-changing. For some time now, we've been told to expect certain things at our exchange. How to present humanitarian projects for the highest rates, what to expect to walk out with, how to open accounts, what's the exchange facility. Over the last few months, we've been told that we all received debit cards loaded with $250,000. More recently, just a debit card with no specified amount. Lately, we've heard we will receive a debit card loaded with 2% of our funds. Nothing over $10 million in the first 15 days can be spent. However, we can make any purchase, place a deposit, and provide seller with a guarantee of payment. We will be given 15 days to return with bank account information. We are also told that we can now take $5,000 in new treasury notes. So a lot of that is new information compared to what we've been hearing over the last several months. Those of us who have ZIM will be offered structured payouts for 10 years to who knows how many out in the future. I know a lot of us have thought about, okay, well, I'm only going to live another blah, blah, blah years, and let's another generation, so maybe 50-year structured payout. Well, don't forget about medbeds that they're talking about, and the possibility that we may be around for a couple of hundred years. So you need to take that into account, that you're going to need money to live on if you decide to live for another couple hundred years. Anyway, the time allotted for our exchanges was always about 20 minutes. Then it went up to 45 minutes. The latest round of information suggests a minimal amount of time. This exchange was always supposed to be a tax-free event. Apparently, Biden wanted to tax this exchange at about 60%. Fortunately, that was stopped. We are again told that we will have a tax-free exchange with clean, clear funds letters provided. Our goal at Indicator Information has always been to provide you with the best asset protection available. Our common law contract business trust just does just that. And some of you may have noticed that I said business trust. And in reality, our trust has always been a business trust. We have just dropped the word business because it confuses people, especially bankers. Anyway, many of you have spoken to other providers, and you've told us that you prefer our trust. The biggest reason for that is that our trust gives you the ability to become your own trustee. Very simply, that means there is no one between you and your money. Also, our trusts are common law, which appears to be where our country is heading as it was generations ago. Common law is still alive and well in the U.S. As I understand it, this global currency reset is about more than the money. If, as we've heard, NESARA and DESARA announced soon afterwards, we will once again flourish under common law. As currency exchangers, we should not be worried about setting up statutory law entities when we'll be under the Restored Republic common law after NACERA's announcement. The common law trust we provide is designed to protect protect whatever assets it owns. Yes, I said whatever asset it owns, not you. Once you exchange your assets into the trust, the assets then belong to the trust. As trustee, you still manage and control those assets, but you don't own them. Hence, no one can take them from you. I mean, one of the first adages of estate planning is own nothing but control everything. We obtain an EIN for you and build a trust around your needs. It's a complete document with no fill in the blanks. All you have to do, only blanks that are there for your signatures. We present it to you in a beautifully printed in a 3-ring binder. Every line that needs a signature is named and flagged for your convenience. We give you instructions on what to do next, and we also give you access to our members-only website. Well, it appears that our guest speaker is in the room, and I'm sure many of you are probably wondering, I bet I know who that is. Good morning, Jim. How are you?
Good. It's the late Jim Knox. I'm late to the call.
No, I always said you just retired. Just retired.
That's right.
Yeah. So what's on your mind?
I was going to say I'm late to the call, so now you can call me the late Jim Knox.
Oh, there you go. Okay. Anything on your mind today, or you just want to go right to Q&A?
Yeah, I got one thing. You said, with these med beds and stuff, they will live a long time. That's a double-edged sword, because a lot of people out here that are in our government, we don't want them living a long time. We want them off the rock.
That's for sure, yeah.
But, no, there's nothing particular in my mind. I just want to stop by and say hi. Help out a little bit on the Q&A. If they got some questions that we might be able to work together to answer, let's just go for it.
Okay, we've got a few hands raised here. Okay. Good morning, McKinley.
Hello?
Hi, McKinley. Were you on mute?
Oh, hey. Yeah, how you doing? Yes, I was. I'm good. Listen, for replacing a trustee, like if I'm the first trustee, my wife's the second trustee. If something happens and we need to replace a trustee with another trustee, how do you do that?
On the website, there's something called sample minutes. And included in those sample minutes is replacing a trustee. It also has a minute in there in case a trustee dies and how you take care of that. It's all there for you.
Now, the president, when you have a trust and you do not want your name associated with anything that may be purchased for the trust, and you built in a president, which is basically, I don't really know what the president does, but I know it can be bought in the president's name, and then it can be, the trustees can utilize it. Would you explain that, please?
Jim, that minute is also on the website, isn't it?
It is.
That's what I thought. So, McKinley, to break that down simply, you're right. You don't necessarily want to buy a house, several $1 million home and have your name as trustee on the county records. You want to have somebody else's name on it. You want to be very, very low profile. So you are going to appoint, for lack of a better word, a president. And that person is going to act on your behalf, on the behalf of the trustees, and can only do what you've told them he can do.
Okay.
So when you make an offer on this house, he's going to make the offer as president of XYZ Trust. And when the house closes, he's going to sign on it as trustee of XYZ Trust. So when it's recorded, it will be XYZ Trust, John Doe, trustee.
Right. Okay. Now,
wait. You'll be signing as president, not the trustee.
Oh, yeah, you're right. Absolutely. Thank you for that.
That's why you gave me the big bucks, right?
That's right. Exactly.
Okay. Now, when it seems like, how do you pick a person to be the president? I mean, what do they? I don't understand. I don't have like friends who would take a position just to do something for me like that without getting something for themselves. Explain that to me, please.
Why don't you pay them? Of course you can pay them.
I don't mind paying. Yeah. Okay. I don't have no problem with that. I didn't know how to go about doing it. So this person has a paid position. The trust pay them, right?
Yes.
Exactly.
Okay. Now, are they paid as long as they're there, or are they? Do I use them for one transaction? Do I just hold them in the paperwork as long as I guess the trust thinks that they need them?
And that's up to your discretion.
Okay. All right. Well, listen. Thank you.
You're welcome. You're welcome. Okay. Area code 828.
Hello, Carol. How are you?
I'm well, thank you. Who's this?
This is Jim from North Carolina.
Hi, Jim.
I have a couple of questions here. What would be the best way to set up this system, the trust, multiple or whatever, for giving purposes? I actually want to give away to whomever I choose a major part of my money.
Are you talking about individuals or institutions? What are you talking about?
Well, just whatever I find, like orphanages, churches, schools, whatever I find. I like to help animals, just miscellaneous things.
Okay, well, we do have what we call a charitable trust. It's not a 501c3, but it is a place where you can, for lack of a better word, park some money. Let's say, just randomly, let's say you get $20 million out of this exchange. You can say, okay, I got $20 million, I'm going to give away $15 million. You're going to put that $15 million in that charitable trust, and that is the one that's going to do the giving to institutions. If you want to help individuals, at this point in time, there's a limit on how much you can give away before it becomes taxable. The limit right now is $15,000. Who knows if that's going to change? But if you were planning on, say, giving somebody $50,000, you might want to consider setting up a trust for them. Put the money in the trust, and that way it's not a taxable event. You can You can stay on that trust as a trustee till they get to know what they're doing, or you can just set up the trust in their name. Period. It's up to you.
I really wasn't thinking about individuals. It would be, just people I can help. I know some churches have overseas mission trips. Just stuff like that. Now, would the Mother Lode fund the charitable trust?
Yes.
Okay. All right. Very good.
I have a suggestion.
Go ahead.
I have a suggestion. This is Jim.
Yes.
If you have an annuity trust, you could take and don't have to use that, but if you use the charitable, if you find an organization that you really want to benefit long term, buy an annuity. They'll get a little bit forever. You don't have to give it all away. That way, if you buy the annuity, it makes interest and it continues to pay. You could say, okay, I want to buy an annuity for this church because in this thing overseas, and they'll get X amount of dollars every month for 10, 12, 15, 20 years. So there's a lot of other tools out there that we can use that are statutory that we can bring into the common law arena, and that would be annuities. So we have an annuity trust, but you don't need to use that. If you want to use a charity trust and then buy a series of annuities for different organizations, it takes you could have to give them a little cash up front because it takes a little while to kick in, but depending on how you set it up. But the annuities is an excellent vehicle to do what you want to do. I'm setting them up for a few people, my brother and a few other people. I'm setting up annuities, and that way I don't have to worry about them going out and blowing the money because they don't get the money. They get it every month. And the other part about this is the trust continues to own the annuity. So the annuitant is the trust, and then you can just pay them right out of that.
Okay, I really like that. My follow-up on that was, do you have control over the annuity? If the person or the organization you're doing this for kind of falls out of your respect, can you discontinue it?
Absolutely. Absolutely.
Excellent.
They're the recipient. Now, there's two ways to do this. You can pay them, and they might have a little bit of a tax consequence. But we don't know how this is going to work after when they change a bunch of stuff. But what I'm going to do is I'm actually going to have an annuity in a trust. I'll use my brother for an example. I'm going to put a trust together, put a bunch of money in it. I'm going to buy an annuity. I'm going to give him a budget. Okay, here's what you can have for a house. Here's what you have for your car. Here's what you have for your first toy. Now you can live on an annuity. So he's the trustee of the trust, and the trust owns the annuity, but he's not the executive trustee of the trust. I am. So I can govern him and make sure he doesn't sell the annuity for a bunch of cash. So you have to realize that a lot of people don't have the ability to control their desires when it comes to you spending money. I was married to one. And so anyway, you have to be very, very circumspect on how you put these things together. We'll help you. We'll design something for you. Just let us know what you want to do. We'll give you some options that you take to your wealth managers and get their final okay on it. Now realize that some of these wealth managers we're going to have to train because they don't understand what we do, and that's not a problem. We can do that. We'll train them and we'll beat them into submission. That's what we'll do.
I like it. That's great. Jim, I'd talked to you one time previously about putting an airplane in a trust. You had told me no, and I wanted to pursue that a little bit because I want to use an airplane to search out places where I can donate, look at, whatever, orphanages. Something that really has caught my attention is I've come to understand that these kids get what's called timed out when they're 18 and they get kicked out and they have no place to go, and that just tears me apart. So I want to be able to travel around and find things like this. So how can I protect an airplane for this purpose?
You put the airplane in a corporation or an LLC, and then you wrap it with a trust. Let me explain that real quick. I had a client that had a business. He wanted to get rid of it. It was a corporation. But he couldn't do what he needed to do, which was move the asset without having to pay a bunch of taxes. So we took the corporation, we wrapped it in a trust, and then we found an individual who wanted to buy his business. We had that guy put a trust together. He put a bunch of money in that trust. And the two guys just changed jobs. I mean, the guy that had the big business that I wrapped with the trust, he was a trustee. The guy that wanted to buy the business had a bunch of money. He put it in a trust. He was a trustee. The two individuals just changed jobs. There was no ownership change, so therefore it was not a taxable liability. So you just changed jobs. Same with what I'm talking about here with the airplane. You put the corporation together, you put the airplane in the corporation, you're the trustee of the trust that owns the corporation. You've satisfied the law, but yet you're indemnified because you're just a trustee, and the airplane's in a corporation, and all the stock of the corporation is owned by the trust. That's one way to do it. There's various ways to do it, but that's one way to do it. The reason I told you about the two guys changing positions so there was no taxable hit, when you get ready to market the airplane, you do the same thing. You say, okay, I've got $1 million airplane here. I'd like to market it, but I got a deal for anybody who wants to buy it. And, I can do this tax-free. And then you tell them about setting up a separate trust, fund the other trust. You become the trustee of the trust with the money. They become the trustee of the trust with the airplane.
Okay. That's great.
So that's just back of your mind. When you get further down the road, you can always call Carol and I, and we'll help you do that.
Okay. Next question. Can a trust have multiple purposes?
Yes, they do. By just being a trust, they have multiple purposes. You can do as much as you want.
By design, yeah. Mm-hmm.
Yeah.
Okay.
Sometimes we call them like an annuity trust. See, all the trusts that we have, with the exception of the real estate trust and a little bit of the automobile trust, is just about the same trust. It's just how we set up the minutes, how we write the instrument at the back end, because the trust itself doesn't change. It's just the application. So you can modify the application by doing it through minutes. And I'm at a loss for a word here, Carol. Help me out with
resolutions.
Thank you. I'd like to buy a valve, Anna. And the resolution. So you can use the resolutions to direct what the trust is going to do particularly in a specific situation, or it can be very, very broad. But you can bring it down through the minutes and the resolutions to do one thing and one thing only. But by nature, there's just nothing you can't do except for put an airplane in it. That's what you can do.
Okay. I'm not going to monopolize the whole call, Carol. Just a couple more questions.
Okay.
There are a lot of things, I would like to do. Travel, go play golf somewhere, visit a park, whatever. What would be your suggestion of a purpose of a trust that would cover as many expenses as possible under the trust umbrella that would let me do a lot of this kind of, quote, personal stuff? Any suggestions?
Well, you're looking for business opportunities, aren't you?
Okay, so if I'm playing golf somewhere, do I have to go visit a real estate agent then while I'm in the town or whatever? Is that kind of what you're saying?
Pick up a card, pick up a brochure, that kind of stuff. Something that proves that you were there and why you were there. And even golf club memberships. I mean, you want to establish new relationships with like-minded people, right?
Yes. So
the trust might be able to pay for at least part of your golf membership or tennis membership or your yacht fees or whatever, marine fees.
Okay. All right. Last question. So the trust owns a house. It says it needs somebody to watch over the house, and it appoints you to stay in the house and watch for it. How broad can you go with the trust paying for things while you're there? Will it pay for your health insurance? Would it pay for your groceries? Is that stretching it too far?
Paying for groceries, I'm sure, is stretching it. What do you think, Jim?
Yeah, you can't do the groceries. And in fact, health insurance wouldn't qualify either. It's the real estate trust is just to harbor the house away from the public and protect you. So you're the trustee of that. You'll have multiple trusts. You were talking about traveling and so on and so forth. Carol's right. Just go get a membership someplace. Every time you go golfing or go to a sporting event of any type, get cards from people. You're always going to run into somebody you want to talk to. If they got a business card, get it. And then you send them a letter. Okay, you just did you propose a transaction for the future. Okay, that's a write-off. If you go and look at what you can do as a corporation, you can do everything that a corporation do and a lot more. But there's a lot more information out there, especially from the Internal Revenue Service, that tells you what you can write off with a corporation. And you can do the same thing with a trust. So use a lot of those documents. Now, hopefully, we won't have to worry about the IRS, as Jay used to call it, the virus.
Yes.
And we'll get rid of that. We won't have to worry about that. But in the interim, you got to follow all the rules that they've set up, and they're easy to do. You just have to realize that certain trusts can do certain things. They can't do everything. For an example, a real estate trust, it's kind of hard to justify buying groceries for yourself.
Yeah, now, any trust is kind of hard to justify that. Yeah.
But you do get an income from the trust, and you can buy the groceries from the income that you get paid to be trustee.
Of course, I'd like to keep that minimal because that will be taxable to me.
Maybe the virus will be good.
So, as of this time, yes. After this is all over, who knows?
Yeah. All right. Thank you so much, Ray. I appreciate it.
You're welcome. Thanks for the questions. Okay. Good question. Okay, let's see who we got here. Come on. Okay. Hey, Wayne, you're up. Wayne, you're on mute.
Oh, yes. My question was just about, the mother lode and having like a manager trust under that, with your trust under the manager trust. Would you recommend that way or just having the mother lode trust with the sub-trust directly into that?
Well, actually, we don't call them sub-trusts. They're all standalone trusts. But the mother lode is the one that's going to fund these other trusts. You can have them stacked however you want to. And what Jim and I have been recommending all this time is you get your mother lode, and then let's say you're not interested in having multiple properties or multiple cars, or let's say you want a house somewhere. Okay, so you only need one real estate trust. You don't need a real estate trust and a management trust because you're only managing one piece of property. Same thing with vehicles. If you only have one or two cars, you don't need a vehicle management trust. But if you're talking about getting a whole fleet of cars, that's different.
Right.
But for different things you want to do, they are going to be standalone trusts that are going to be funded by the mother lode. Does that answer that question for you?
Yes, it does, because okay, yeah, you did. I'm good.
Okay, thanks, Wayne. Good morning, Ginger.
Good morning, Carol. Good morning, Jim. I have a couple of questions, but I would like to share something first. As I've been this last week trying to share with others getting a trust and why, and my husband Tony and I, we've been doing this, I think we started about 2015, but this person was asking me some great questions, and if there's anybody out there that's new in this, I'd like to really just compliment Carol and Jim. First of all, their integrity is amazing. Second of all, Carol's been doing this a long time, and with her sweet husband that's passed, they're amazing. They not only know the law, and their trusts are beautiful inside and out, and I don't just mean by the looks. We've had trusts before, and the information's incredible. If you're new, you know, the lingo's going to be new, and it takes time to learn these things, and I'm not saying I know everything, but after 40 years of working in the corporate world and having other trusts, these are amazing trusts. The protection is there, and I don't know if Carol's still sending out the CDs with her trust because of the wonderful website that Jim has created, but, you know, when you get these trusts, the explanation is there. And if you will read the information they've sent you, and in the beginning it can be a little overwhelming. I have to constantly remind myself of stuff, and there's a lot to learn. But I just would really encourage anybody that's a newbie, just because you don't understand it all doesn't mean that it's not amazing. Like anything, you know, you could drive a car but maybe not know how the engine works. But I really encourage anybody, you know, just to dive in and take it step by step. But
well, thank you, Ginger.
Yeah, I really cannot say enough for you guys. My one simple question, which may sound funny to some, but I know in the past different trusts and when we were learning about the straw man and stuff, when you're signing contracts, ink made a difference. The color indicated things, and I noticed the other day when I was going through my trust that there was some black ink and there was some blue ink. Does it matter on these trusts if there's a certain color?
I will comment on that first, and then I'm going to let Jim finish. You know, I've always signed things in blue ink because that was supposed to be the color. But recently, you know, I've been to a notary here in Oklahoma. I've been to a notary in Florida. I think it's black ink, and doesn't seem to make any difference to anybody anymore. But Jim, would you like to comment on that?
Yeah. First off, I have to change my hat after that great endorsement. My head's so big. I mean, come on. I'm going to have to stretch that thing out. Thank you so much. I mean, wow. Okay. Yes. The blue ink. I take blue ink pens when I go do the notary, and I make them sign it in blue ink. And the reason that we used to use blue ink is it was easier to tell which was the original and which was a copy, because most copiers were not color copiers back then. Now most color copiers are color copiers, so then it's kind of hard to tell. But that's the reason that we always use blue ink. I've been doing this stuff for, decades. We always use the blue ink. That's why it came out that way, because we could always tell the original from a copy.
You know, I was told too, with a black at one time having to do with the straw man was like the difference. The blue was the real person and the black was not, so.
Right.
Okay, well, then
Right.
I've got both colors going on in there. My other question after Jim got my head stirring there was, can you sell a real estate without paying tax like you could an airplane?
No, you can't unless you do what we do. So you can sell real estate with no taxable event if you do it through a trust, if you structure it properly where there's not actually a change of ownership. If you have a trust, a real estate trust, and you have somebody put another trust together, put the cash in that trust, and you two switch jobs as trustees, that was just really an employment change. There was not an ownership change. That's not a taxable event. You can do it with cars, you can do it with virtually anything. I mean, I had one of my clients did it with $5 million business and came out no taxes. So, yeah, it can be done. It's done all the time. It's how the super rich and the somewhat rich do it. I mean, the super rich do it all the time. The somewhat rich, meaning us, future rich, will be doing it this way. But this is just little techniques that they try and hide from the public because they want that tax revenue. So if you get into a situation, anybody on this call, if you get in a situation where you don't understand it, just call Carol and then she can get hold of me or call me or something like that, and we'll get you squared away on that. It's a simple procedure. You just have to be careful how you structure it, what you say, because remember what you say will come back and bite you if you're not careful. It's what you say to the person that's trying to work with you for the taxable, tax-free, non-tax, whatever you want to call it, event. You got to be careful what you say. But it does work.
Awesome. Well, I definitely think you and Carol are going to have to live forever to help us all forever.
That's what the
well, that's why we have med beds, right?
That's right.
Thanks, guys.
Thank you, Ginger. Okay. Hello again, Gary.
Morning, Jim and Carol. This is Gary in Phoenix.
Hi.
On the same theme of giving money away, like using a charitable trust or something like that, you could also do that through a foundation, but do you guys put foundations together? And if you do or if you don't, going through a charitable trust, when you fund that trust and then give that money away, is that a taxable event for either you or the person that you give the money to?
You kind of lost me there. We don't do foundations.
Okay, so that answers the first question.
But secondly, as far as giving away money, currently you can only give away $15,000 before it becomes taxable.
Okay, so it falls under that umbrella even for a charitable trust.
Yeah, because our trust is not, the trust is not a 501c3. It's just a trust where you stuck money away. Okay, I'm going to give away this much money. It's going to come out of this trust. It's not a 501c3. But if you want to give somebody, say, a larger amount of money, more than $15,000, we suggest just setting up a new trust for them and funding the trust. The initial funding of the trust is not a taxable event.
Okay, that's what I thought, but I wasn't sure, and I just wanted to get that clarified.
Okay.
All right, thank you. You answered my question.
Thank you. Okay. Brian, how are you today?
I'm doing fine. Can you hear me?
Yes, we can.
Okay. Canada. I'm in Canada. Are these trusts relevant in Canada?
It's a common law trust. Canada is a common law country. Yes.
Okay. Do you have, and I'm sorry, I chimed into the call a little late and I didn't really get the beginning of it. Are you, have you set up trusts for Canadians before?
Yes, I have.
You have. Can you contact me privately, please, afterwards?
I don't have your number. All I have is your, I've got your email. Okay, let me write it down here.
Thank you.
All right. I'm writing your email down.
I'm unfamiliar with this platform. Can I send it privately to you?
Why don't you just send me an email? It's info@indicatorinformation.com.
Info@
Indicator, INDICATOR, information.com.
Thank you.
Thank you. Okay. Luis, or is it Louis? I've never been sure. Is it Luis or Louis?
Luis.
That's what I thought. Well, good to hear from you. What can we do for you today?
Yeah, firstly, I wish to thank you, Carol and Jim, for your continuous wonderful support since I created my trust through your institution. Secondly, I have a couple of questions that I'm going to mention together so that you can answer properly as you wish. The questions are, for a trust that added your spendthrift clause through a minute instead at the original creation, how the current trustees and certificate holders can get covered under that new clause. And secondly, if a bank requires a trust with a spendthrift clause, what can we present to the bank in order to certificate that it contains a spendthrift trust? A spendthrift clause in the body.
Well, I thought I just sent you that verbiage for the minute, to create a minute for it.
No, you send me the spendthrift clause and the instructions how to create it to the trust. The question is different now. It's once I create the minutes, since it's a forward action minute, meaning that future trustees and certificate holders will be covered under a spendthrift clause. For me, in my case, I am the current trustee. Do I need to resign and be nominated again and sign again as a new trustee? And
no,
the certificate holders? Yeah.
Not at all.
So I keep everything as it is, just add the minute to the trust.
Yeah.
Jim,
just.
Let me jump.
Yeah, go ahead. Yeah, please.
Okay. All right. When you add the minute, you need to have a board of trustees meeting to let everybody know, and the certificate holders must also be there to let everybody know that the trust has been updated. It can be by phone. It can be over the dinner table when you're meeting with your family. But have a meeting. And then what you do is you write an addendum to the minute saying that the Board of Trustees and the certificate holders are aware of this and hereby approve of this minute, and just handwrite it in there. It's even the best way to do it. Handwrite it. We all sat around, had dinner and wine, and we all agreed to this. It's a great deal, and you put it in there in the minute, and then when you go to the bank, you show them that minute, and you see that little paragraph where you all met and agreed to it. There's nothing they can say, and that's your indemnification right there. But you need to have that little function where everybody gets together. It could be done over the phone.
In his case, it's he himself, the seeing himself.
Yes.
Yes. As a matter of fact, I did it in that way, as instructed by Carol. So then it's just a matter that I just present the minute, and that's it if it's required, and nothing else needs to be done to the body of the trust.
Exactly, because the Board of Trustees consists of three people. It always consists of three people: me, myself, and I.
And I. Okay, wonderful. Thanks for clearing out my doubts.
We argue sometimes, but we always come to a good conclusion.
That's true. Okay, that's it for now. Thank you again.
All right. Thank you. Bye-bye. Okay. Paul Megason? I'm sorry I used your last name. Area code 207.
Oh, that's Bonnie and Paul.
Hi.
Can you hear me? Hi. Are we
I can hear you.
All that? Okay. In mergers and acquisitions for businesses buying and selling each other and things like that, say you have a $100 million sale price and there are normal taxes on that, are you saying that the trust can prevent, stop, eliminate those taxes?
It's a possibility. It's a possibility. I'm not saying you can do it every time. If you're getting that amount of money, you're going to have to be really, really careful. But remember, the only time that there's a taxable event is if there's an ownership change. If there's no ownership change, it's not taxable. So just structure it where there's no ownership change. And to, again, go over what we've done in the past, the gentleman wanted to he had a $5 million company. He wanted to sell it. He challenged me. He said, I want $4 million offshore, $1 million onshore, I don't want any taxes. Can you do it? And he was an existing client. I said, sure. So he already found a buyer. The buyer could put 20% down. Remember, $5 million in one, so it's 20%. And he put it in a trust in America. And then they took and went offshore, international business company, and so on and so forth. I helped set that up. And they transferred the ownership of the equipment there and would it lease back to the company, the corporation here, which is wrapped in a trust. Well, only thing that happened here was the two trustees changed jobs. So that was it. And
I get it.
Pardon me?
Wow, I said I get it.
Okay, well, if you have questions, you want more of that, give me a call. I'll give my number at the end of the call today, because that's the kind of stuff I'd love to do, and I'd love to help you with that.
Okay, thanks very much.
Yeah.
Thank you, Paul.
Thank you.
Okay. James, area code 386.
Yep, that would be me.
Hi there.
Hi, how's it going? I have a meeting with the president of the bank coming up this week. And,
can you speak up a little bit, please?
Sorry about that. Yes, I have a
better.
meeting coming up with a president of a bank this week, and I'm pretty sure, we're going to talk about swap currencies. Anyways, what I'm asking is, now, if I wanted to start a S-Corp corporation, what trust would I use for that, and should I use a different trust for another LLC that I have that I can put under the corporation?
Well, we don't do corporate. Okay, we do the trust. What you're saying is you have a corporation that you want to do an S corp. So you're going to get permission from the Internal Revenue Service to go directly to your tax number for the taxes. You can wrap that in a trust. I wouldn't do it that way, but you could.
That's what I was asking. I was saying, what would you suggest?
Well, an S corp is going to put the liability back on your shoulders, and that's why they do that, because they're just a small company. It's just you, so you change it to an S corp. But it's not going to be a tax advantage to you at all to do that and then have a trust. So, if you first off, what's the reason for the corporation?
Corporation is there's going to be a board. You know what I mean? We're going to invest in some properties and some other things, pretty much.
Well, use a trust. You can have any type of trust can be an investment trust if you do it properly. You have a board of trustees. You can invite people to be agents, presidents, vice presidents if you need that. You can actually remember, the executive trustees control the trustees. They don't have to be executive trustees. They don't have to have the horsepower to make any major changes. It's just the executive trustees do. Anytime you have any corporation, any LLC, any limited partnership is created as a fiction by the state, and they give you permission to operate until you annoy them. And then they'll discontinue the permission. So if you don't ask permission, you don't ask permission from anybody to create a trust, because it's part of our right. We have the right to contract. So don't put yourself in a position where the government can control you. And that's why I got in this business years ago. I was making so much money when I was younger. I was raised in Alaska, worked in the pipeline. And the trust came along, and I learned it then, and it just saved me all kinds of money because I didn't ask permission from the government to exist. I just went around and did my business. And it's an amazing instrument. I've been doing it for 30 years now, or over 30 years. It's an amazing instrument. You can do so much with it.
Okay, so my next question is, I know that's what I'm trying to figure out this, because after the meeting, my money's going to be put It's going to go digitally. I mean, in a digital wallet. Right. Now, the corporation, basically, what I'm saying is, it can't. The bank, when it's digital, I think they can insure up to $10 billion. That's what I'm reading correct from the Treasury. And should that trust for the S corp, because I don't want to leave my money in the bank, you know that. So it's going to go to another digital wallet as soon as the deal's done. Best way to protect it, can I have a trust that protects a digital wallet?
Well, yes, of course. And again, you don't need a corporation of any type, any form. You can use a trust for everything you're trying to do. Probably, I'll also offer, if you really want to sit down and go over this stuff, call me. I'll give you my number at the end of the call, and I'd love to work with you on this stuff. This is what I like to do. You know,
yeah,
so
absolutely. I would like, you know what I mean? And I'm sure you and I both know what's going on, and I'd love for you to call me. I'm, like I said, I got a meeting on Wednesday with the president of the bank. We've talked, prior. So,
call me anytime. I'll give you my number at the end of the end of the call. Call me between now and even call me this weekend. I have permission to call me this weekend, and because this is the kind of stuff that I really like to work on, and I'll sit down and talk to you till we both come to a conclusion that you got to understand it.
Oh yeah, I mean I understand most of it. That was what the thing is. Like I was thinking, well, it's all going to be done on the quantum financial system, which we know that it's safe as it gets. Now, my worries were, well, under the S corp, if we hold all of our money in a digital wallet, can the trust protect that? So that's what I was trying to figure out.
Yeah. Okay. The trust cannot protect an S corp. The trust is an entity. The S corp is another entity. You can wrap it in there, but it doesn't make any sense in this case. I'm a big fan of Wells Fargo for one thing and one thing only. They do our trust and never ask questions, and they work with me constantly. I mean, if you get the right people, like I have got here in Salem, Oregon.
Oh, it's all about connections. I mean, trust me, I'm well aware of that.
Yeah. So let's talk at length. We'll talk about it. Give me a call. I'll
Absolutely.
give you the number at the end of the call.
Thank you.
All right. You bet.
Thank you. Okay. Melinda, unmute yourself. Area code 503. Melinda? I hear something. Can you speak up?
Am I unmuted? I don't know.
Okay, yes, now I can hear you. Mm-hmm.
Okay, so the deal is this. Let's see here. Hold on a minute. I can't find what I was looking for. So I have a trust, and I am the trustee of my trust. My question is this. Do I oh gosh, I wish I had this. I just keyed this in, and then I went to print it, and I think I might have lost it. So I'm a little bit baffled right now. Can you come back to me in a minute?
I can, but before we do that, you say you have a trust. Do you have one of our trusts or somebody else's?
I have a complex trust. And in my trust, I have two homes. I live in one, and one is an Airbnb. Because of COVID and the no travel, stay-at-home regulations, I lost all of my bookings. So my income basically stopped. Now, the government is offering a PPP, which is a payroll protection plan, loan. And because I didn't pull any income from my trust during the time when all of my bookings canceled, I took income through using a credit card, my trust credit card, because then I could get credit card perks. So do you think I would even qualify, or my trust would even qualify for a PPP loan?
Jim, you want to take that one?
Yeah, I'm thinking about this one. Yeah, it would if it's structured properly. If it's one of our trusts, I don't see why it wouldn't. If it's somebody else's trust, I can't answer the question 100%. But a trust is just like anything else. It's an entity. And the government's going to give entities money because of what they did to us, basically. They're trying to buy our forgiveness, if you want to boil it right down to what it really is. And it should work. Now, I don't know, do you have one of our trusts or not?
No, it's a complex trust.
Well,
but what? You said, oh.
You didn't get it from us, so it's not one of our entities, correct?
No, it is not.
Okay, well then I really can't answer the question without seeing how the trust was put together. Each trust is different. For us, yeah, I'm sure you could do it. For yours, there's no way to know. I mean, I hate to be that way about it, but I just don't know.
No, that's fine. I totally understand. I'm just thinking because the PPP, which is the Payroll Protection Plan loan that the government is offering, is for payroll. And if I had taken money out of the trust for myself, then that would qualify as payroll. But I didn't do that. Instead, I used a credit card and used it for personal expenses from the trust.
I think you could probably file and say that due to the situation, you were forced to use a credit card because there was no income, and now you'd like to get that repaid because that is how you covered your expenses. It's one and the same. It really, really is. It just depends on how you present it to them.
Exactly. Okay.
Yeah.
All right. I like your explanation on that because I didn't. That's a good explanation. I didn't know how to word it since my expenses did go through the credit card. So.
Yeah, it's cash. I mean, in essence, the way that the government's set up right now, it doesn't matter if it's a credit card or it's Federal Reserve notes. They're still fiction, and you're just using a different vehicle to use the same fiction. Should work.
Yeah, I mean, I was just trying to use a logical way of covering my expenses without taking a draw, so to speak, from the trust. And
I think you did a good job. I think you did the right thing, and it's all in how you present it to them, and they should agree.
Okay. All right. Thank you so much. I appreciate your help.
You bet.
Thank you.
Thanks.
And we have
Bye-bye.
one more question here, and I do have a few closing remarks. This call does have to end at the top of the hour because I have to be out of here in 15 minutes. So, area code 619, we have a question.
Hi, Carol. This is Raul again.
Oh, hi.
And hi, Jim. That's nice to hear your voice again. I have a question. Carol, you mentioned something about the ZIM in 10 years or something like that. I didn't quite get we're lost in words, but you mentioned ZIM in something 10 years.
They've been offering us structured payouts. Apparently, because of the value of the ZIM, and it's also 90% of it's supposed to be humanitarian, they're going to pay us in structured payouts. And apparently, we can choose anything from 10 years up to I don't know how many years. Some people I've read up to 250 years. Who knows? But like I said, most of us aren't thinking 250 years. But then again, with med beds, you may have the opportunity to live another couple hundred years. You may want to think about it.
I also have been reading some of the stuff that's on the internet about if you're over 65 or 70, that you're giving it all at once. Is that still applicable, or is that still in the works?
I have not read that lately, but I would assume that's still true.
Okay. The other question is the real estate trust is for each property that you buy. It's not one real estate trust to cover a whole mess of homes, right? Each home has its own real estate trust?
That is correct, and that's where the real estate management trust comes into action when you have more than one.
Okay, so the real estate management trust will facilitate all the real estate trusts. Is that what you're saying?
Yes, all the taxes, all the insurances, all the homeowners' responsibilities, that kind of stuff.
Okay, well, those are my questions, and Jim, I hope your head shrink a little bit so you can wear your hat again. But nice hearing you guys. That's all I have for now.
All right.
Thank
It's
you
good
very much.
talk to you, Raul. Okay. All right, James, you have another question, but as I said, we got to make this quick, but we'll do what we can. What's your question?
Yeah, real quick, since that last gentleman, he brought up the Zim. I was wondering why, I mean, I know that, people are in Reno right now. And I heard how I thought the cap date was 5 to 10 million with the humanitarian project of 20%. And I still don't understand why can't we do the ZWD, exchange it to ZAR, back to USD in a digital wallet? Since, the quantum financial systems out there in Reno also too, and that's what people are exchanging right now. I haven't gone out there yet, but I'm heading out there, in a month, maybe before that, after this week. So I was wondering if you know for a fact how that's going to get paid, because, logically, with the prices that people are saying, it's definitely not realistic. And I heard also about the quarterments, like you were saying, that I've heard that was a way too. So I didn't know, kind of wanted to confirm if you knew any other information.
Over the years, since we've heard about Zim, we've heard it had to be 80% humanitarian, 20% personal, 90% humanitarian, 10% personal. No requirement for humanitarian at all. So I don't know. I don't think anybody really knows. As far as your question about exchanging it back to USD, that's totally out of my realm. And Jim, do you have a comment?
No, not on that. We won't know when we get there. The problem is
exactly nobody knows. That's $1 million question. I don't know.
Yeah. As I've always say, we don't know what we don't know.
You are absolutely correct. That's basically what I was asking.
Okay. Well, thank you, James. Thank you. All right.
Okay, I have one quick comment
sure.
on some of the stuff here. When you're looking at these management trusts, Carol called it a real estate management trust. When you go to order, it just says management trust. It doesn't say real estate management trust or automobile management trust. It's a management trust. You can have 1 or 2 or 3, doesn't matter to us. And we just updated, or in the process of updating the applications to where if you want more than one management trust, you can do it on the one application. As you get down the bottom, it asks, you need a second one. And then then you tick the box, and then you got the 5 or 6 questions. And what we're looking there is, is the creator the same? Is the trustee the same? Is this the same? Is that the same? It's all you'd have to do. And then you just add up how many trusts you bought, and you buy 2 management trusts. You declare one to be a real estate management trust, one to be an automobile management trust. And so we're trying to get this as easy as possible, and Carol came up with this great idea to do this, and I'm working on it. She's just a slave driver, I'm telling you, folks.
Thank you, Jim. and thank you for participating today. I really have appreciated your attendance and your help, as I'm sure everybody else on the call has.
I've really enjoyed it. Thank you.
Yeah, well, good. I'm glad. So just in closing, just so you are all aware, once the RV starts and our appointments are made, we will be under an NDA. A new communications monitoring system of social media posts, email, text messages, telegram, phone conversations, etc., is in effect by the NSA and military intelligence. You need to be quiet about global currency resets and RV-related issues, especially from the time you call the 800 number and set your appointment. In order to set that appointment, you will be required to sign a non-disclosure agreement. From the time you call the 800 number, through at least the 90-day period following the exchanges or redemption, everything you write or say about the RV DCR could be heard by the new communications monitoring system to determine if you broke the conditions of your NDA. If so, your monies could be frozen, so keep it quiet. And also, I know we've discussed this in the past, but as a reminder, there are certain words and terms you cannot use at your global exchange or violate your NDA. Cannot say redemption, exchange, global currency reset, GCR, revaluation, RV, currency exchange rates, quantum financial system, QFS. Do not use these terms after you exchange and sign the NDA. We may, if we're able to, send out an email blast announcing that the Eagle has landed or something to that effect. And as a reminder, I will be taking a couple weeks off after the RV to get my own business done. Jim will probably be doing the same. I doubt I will have many more conference calls post-RV. I know many of you have a list of trusts you want post-RV, and my staff and I will be happy to help you as soon as possible after the exchange takes place. Thanks to all of you for your time and attention. My name again is Carol Werelius. My numbers are 425-820-8090 or 877-335-018. I am available between 10 and 6 Central Time, and the best way to reach me is by email, info@indicatorinformation.com. And Jim, you're going to add your contact information?
Yeah, I will. 503-583-6791, and the best way to get hold of me is jim@jimknox.me. That's Jim @jimknox.me, not .com. I have a distant relative in Maine that gets annoyed with me when he gets emails directed to me. If you use a .com, he is going to bark at you. So I'm warning you right now. It's .me. And like I say on my website, it's about me. What else could it be?
There you go. Well, thank you again, Jim, for joining us today. I really appreciate it. Have a happy and safe weekend, everybody, and go RV. Bye-bye.